Welcome to the deep dive, everyone. Today we're actually diving into something pretty unique, a document that you, our listener, sent to us.
Oh, that's fantastic.
Yeah, it's excerpts actually from the Severn Trent PLC offer for sale document published way back in 1989.
Wow, 1989. This document gives us a really fascinating peek into kind of a pivotal moment in time in the UK during that wave of privatization that was happening under Thatcher. And specifically, we're going to be looking at the water industry. There was undergoing this huge transformation, a huge shift at that point.
Okay, so before we get into all the details and everything, can you give us a little bit of context? What was the water industry like before privatization?
So picture this, right? Imagine water services being managed regionally by these publicly owned entities.
Okay.
And these were called water authorities. And they handled, well, everything from supplying the water to treating that sewage.
Wow.
And Severn Trent Water Authority, which is the kind of the focus of our document, was one of the largest in the UK. I mean, it served millions of people in the Midlands.
Okay, so this document is basically, it's like a sales pitch, right? Trying to draw in investors to this newly privatized Severn Trent PLC.
Exactly. It's like a mix of like a company history, kind of a brag sheet about their operations, their financials, and it's got this it's promising future riches, and all of it's aimed at attracting those shareholders.
So we really need to go back to 1989 to understand all of this. This was a huge time of economic change in the UK. And, the government was really pushing for privatization of many industries, including, of course, water.
That's right. The idea, at least the prevailing idea, was that private companies would be more efficient, more innovative, and ultimately that would lead to better services and better infrastructure.
Hmm.
But of course, there were those critics out there who they were worried about the impact on affordability and whether these profits would, be prioritized over the public good.
And this document just kind of throws us right into the heart of the debate. It's amazing how just this single document can encapsulate such a complex historical moment, right?
Absolutely. And it reveals so much about the economic forces, the political forces at play, but it also gives us these little glimpses, these fascinating glimpses into the everyday work of a water company.
Yeah, speaking of that work, one thing that really jumped out at me is the sheer scale of Severn Trent's operations.
Oh, yeah.
It's a massive area, lots of different industries, and a huge customer base.
Yeah, and they were already making significant investments in infrastructure even before privatization.
Wow.
And the document actually highlights this. Their consistent track record of meeting those financial targets, the ones that were set by the government. I mean, it makes you wonder, why even privatize, right, if they were doing so well already as a public entity?
Right, so why did the government push for it then? And what was in it for Severn Trent?
Well, the document really emphasizes this urgent need for massive investments to keep pace with the growing demand and to maintain this high-quality service. They actually had a name for it. They called it the K Investment Program, a 10-year plan, and get this, it totaled a whopping £4.08 billion.
Billion. That's billion with a B. I mean, that is a serious amount of money.
It is.
Where was all that money going? What was it for?
Well, it was a mix of things, upgrading that core infrastructure, pipes, treatment works, but then also things like their offices and vehicles. And they even hint in there that even more investment might be needed in the future, especially to keep up with all those environmental regulations, which, we all know they were becoming increasingly stringent.
Yeah, it makes you realize how complicated it really is to run a water company. I mean, it's not just turning on the tap, it's this whole network of infrastructure and resources and expertise.
Absolutely. And it was all tied to this delicate balancing act. The document talks about this need to keep customers happy, keep bills affordable, but also they have to generate enough revenue to fund those massive investments.
Wait, hold on. They got an award for sludge disposal? I mean, that's not exactly something you hear every day. What was so innovative about their method?
Well, Severn Trent, being an inland water company, they couldn't just, dump their waste into the sea, right? They had to develop these sustainable solutions for treating that sewage and then disposing of that sludge on land. And their specific method, this thing they called subsoil injection, was considered so pioneering that it earned them this special recognition from the Royal Society of Arts.
So it's not just about the environmental responsibility, it's also about saving money and keeping those costs down for customers. I mean, that's pretty smart, isn't it?
It is. It's a smart strategy. By finding innovative solutions, cost-effective solutions, they could potentially avoid passing on those higher expenses to their customers.
Okay, so they've got the infrastructure, they've got the innovation, the track record, but how did they plan to entice investors? Were there any guarantees, about profitability?
Well, this is where that K factor comes in. And I know it sounds complicated.
Yeah.
But it's basically a mechanism, a special mechanism that allowed these companies to increase prices, actually above inflation, to fund those investments.
So it's like how sometimes your rent goes up, but your landlord hasn't done anything to your apartment.
Yeah, it's a bit like that, but on a much larger scale, of course.
Okay, so it's kind of like a way to guarantee a certain level of return to investors, even if that means, well, customers have to pay more.
Yes, but there is a bit of a catch here. The document mentions that this K factor could actually be reviewed and adjusted by the Director General.
Hmm.
So that kind of injects a little bit of uncertainty into the whole equation.
So even with this K factor, there's no guarantee that investors would, be just rolling in dough.
Right. It was still a gamble in a way. But the directors of Severn Trent, well, they tried to sweeten the deal a little bit.
Mm.
They offered these really optimistic profit forecasts. They projected a profit of £121 million for the year ending in March of 1990. And then they even gave what they called a pro forma profit forecast, which took into account this new capital structure after privatization. And that number was even higher, £208 million.
Hold on, pro forma. That just sounds like financial wizardry to me.
I know, right? It's not magic, I promise.
Okay.
But it's a way of presenting those numbers that reflect kind of a hypothetical situation.
Right.
In this case, they're showing what the profits would look like as if the company had already been privatized for the entire year.
Hmm.
It's like saying, look, once we're private, we're going to be even more profitable.
Okay, so they're painting a pretty rosy picture. Big profits, innovative solutions, commitment to service. But the document also mentions this rising debt. Wasn't that a concern? Like, how did they balance that need for investment with, the risk of becoming over-leveraged?
That's a great question, and that's one that we're going to explore in a lot more detail in part 2.
Welcome back to the deep dive. We're continuing our exploration of this Severn Trent PLC offer for sale document, still trying to understand all those like intricacies of water privatization in the UK.
Yeah, and we kind of left off on this cliffhanger about their debt. Like, how could Severn Trent balance this need for huge investment with, well, the risk of just taking on way too much debt?
It's like walking a tightrope, right? Like on one side you need that investment to, improve the infrastructure and service, but if you fall too far the other way, too much debt could just sink the whole enterprise.
Exactly. And the document, it actually reveals that they were really aware of this challenge. They talk about, exploring these new ways to generate revenue and manage those costs. And one thing they really highlight is this impending change in how water charges were collected.
They specifically mention this abolition of domestic rateable values and then this introduction of the community charge. Wait a minute, are we talking about the poll tax here?
Yeah, the infamous poll tax.
It's fascinating to see how those like broader political shifts kind of trickled down to the local level and really even impacted these water services.
Oh, it's all connected. And this change in charging methods, I mean, it presented both challenges and opportunities for Severn Trent. They would no longer be relying on those district councils to collect those charges, and that meant taking on that responsibility themselves, potentially, increasing their operating costs.
So they had to figure out how to do more with potentially less. I mean, talk about pressure.
Yeah, a lot of pressure. And on top of all that, they were still, committed to improving service quality. And they highlight these investments in things like water appearance, how it looks, making sure the supply is reliable. And they even talk about addressing those unfortunate incidents of foul flooding.
So they're promising this better service, investing billions in infrastructure, and navigating this like complex shift in charging methods. But how did they plan to keep customer bills affordable with all of this going on?
I mean, that's the million-dollar question, right? And it gets to the heart of the debate around privatization. Those critics, they were worried that private companies would just put profits first, prioritize profits over affordability.
Did Severn Trent address those concerns at all in this document?
Well, they do emphasize this commitment to finding a balance. They talk about exploring alternative charging systems, to make sure things are fair and affordable. But they also, make it clear that they need to generate enough revenue to actually fund that ambitious investment program.
So it's like they're trying to have their cake and eat it too, promising good service and affordable bills while also telling investors, hey, don't worry, we're going to make you some healthy profits.
It is this tricky balancing act. And the document, it doesn't shy away from that complexity.
We've talked a lot about, all the finances, but what about the environmental impact? Did Severn Trent address that at all?
Oh, they definitely try to highlight their environmental credentials. They talk about developing those recreational facilities at reservoir sites, promoting conservation, and even, earning some environmental and conservation awards.
So it sounds like they're trying to paint this picture of themselves as these like responsible stewards of the environment.
Yeah, but it's important to remember, this document, it's a marketing tool at its core.
Hmm.
It's designed to attract those investors. So it's natural for them to want to, emphasize all those positive aspects of their operations.
Right, right. We have to kind of read between the lines a little bit and remember that broader context. They also had to, comply with those increasingly strict environmental regulations. And, well, those often require a lot of investment. And guess who ultimately pays for those investments?
Yeah, the customer, it all kind of circles back to that balancing act between, staying afloat financially, customer affordability, and environmental responsibility. And that's a challenge, really, that still faces the water industry even today, decades after privatization.
Speaking of challenges, you mentioned before that Severn Trent, being an England water company, it presented some unique difficulties. What were those?
Well, unlike, coastal water companies, they couldn't just discharge that treated wastewater into the sea. They had to come up with innovative solutions, for treating the sewage, disposing of that sludge, but doing it on land. And as we talked about before, they really leaned into this challenge. They developed those pioneering methods like subsoil injection for sludge disposal.
I remember that. They even won an award for that, right?
They did. It's amazing how sometimes limitations can actually lead to innovation.
Right.
And these innovations, they weren't just about environmental responsibility. They had these big cost implications. Treating and disposing of sludge, that's a major expense for any water company.
So by finding those efficient, environmentally sound solutions, they were killing two birds with one stone, protecting the environment and controlling those costs.
Exactly. It's a great example of how sometimes doing the right thing for the planet, well, it can also be good for business.
Yeah, it's all starting to make sense now. They're investing in infrastructure, they're trying to keep those customer bills affordable, they're finding those innovative solutions for environmental challenges, and on top of all of that, they're navigating this really complex regulatory landscape. But with all of that going on, what about the people? What about, the employees who are actually doing the work? Did the document mention them at all?
You're right. We can't forget about that human element. And the diamond actually, it does give us a glimpse into the lives of the people, the people who are working at Severn Trent, everyone from those engineers to those craft and manual workers.
What was their experience like during this whole period of transition?
Well, they were facing, this time of significant change and uncertainty as the company, shifted from this public entity to a private one. And the document talks about this organizational restructuring, manpower reductions, and changes in who was responsible for, negotiating pay and working conditions.
It must have been a stressful time for them, right? Wondering how all these changes were going to impact, their jobs and their livelihoods.
Absolutely. And it's a reminder that privatization wasn't just this, abstract economic policy. It had very real-world consequences for those people who are employed by these companies. Their stories, they're often overlooked in those grand narratives of economic transformation.
It's so easy to get caught up in the numbers and the big picture, but ultimately it's people's lives that are being impacted by these decisions.
It is, and it's important to acknowledge that, to remember that behind every balance sheet and profit forecast, there are real people whose lives are being, shaped by these changes.
So we've covered a lot of ground. We've looked at the financial aspects, the environmental considerations, the impact on employees and all those challenges of balancing, well, those competing interests.
Yeah, and we've seen how this single document, the Severn Trent PLC offer for sale, can really offer us this window into such a complex and pivotal moment in history.
It is amazing what we can learn from digging into the past like this. But how do these events from decades ago, how do they connect to the present? What happened after they signed on the dotted line? Did Severn Trent succeed in their ambitious plans?
That's a fantastic question, and it's one that leads us right into the final part of our deep dive. We're going to explore the aftermath of privatization, the long-term impacts on the UK water industry, and what lessons we can learn from this historical journey.
Welcome back to the deep dive. We spent the last two parts, really digging into this fascinating document, the Severn Trent PLC offer for sale. It's really like this little time capsule, a snapshot of the UK water industry right on the edge of privatization. But what happened next? I mean, did they actually live up to all their promises? Did privatization, did it actually deliver those benefits that everyone was hoping for?
That's the big question, right? It's a question with really complex and often, contested answers. The impacts of privatization, they're still being debated, even today,
Yeah.
with strong opinions on both sides.
It's not a simple black and white issue. So let's try to unpack it a little bit. What were some of the key outcomes, the main takeaways from privatization in the UK water industry?
Well, on the positive side, there was a pretty significant increase in investment in infrastructure.
Hmm.
Remember that huge, massive K investment program that Severn Trent laid out? Well, that kind of investment, it became more common across the whole industry. And that led to, upgrades to treatment plants, pipes, and a lot of other really essential infrastructure.
Okay. So that's a point in favor of privatization then. I mean, better infrastructure, that generally means better service, right?
It certainly can. And a lot of people would argue that, the quality of water service in the UK, it really did improve in the years following privatization. But, and this is a really crucial but, there are also some unintended consequences.
Ah, there's always a catch, isn't there? What went wrong?
One of the biggest concerns was the impact on customer affordability. That K factor that we talked about, the mechanism that allowed these companies to increase prices to fund those investments. Well, some people, they argue that this led to a really sharp rise in water bills. And that, of course, put a strain on a lot of household budgets, especially for those low-income families.
So the cost of all those infrastructure improvements was basically passed on to the people who were using the water.
In a lot of cases, yes. And this raises those questions about the balance between private profit and the public good. Did privatization lead to a situation where these companies were basically incentivized to put shareholder returns ahead of keeping water affordable, keeping it affordable for everyone?
That's a tough question, and it seems like it's one that we're still grappling with today. It does sound like there were both benefits and drawbacks to privatization.
Yeah, exactly. And it's important to remember that the story, it doesn't end with this document, right?
Right.
The water industry, just like any industry, it keeps evolving. There are these ongoing challenges with aging infrastructure, with climate change, with growing populations, and the question of how we best manage this vital resource, well, it remains a really crucial one.
It's a good reminder that there's no like one size fits all solution. Every policy decision, every decision we make has trade-offs, and it's really important for us to consider those long-term impacts, both the good and the bad.
Absolutely. And it's so important to keep asking those questions, to really scrutinize the data, and to hold those decision makers accountable, whether they're, the public sector or the private sector.
This whole deep dive into this Severn Trent document it's been a real eye opener for me. It's given us this glimpse into a really complex historical moment, but it's raised all these questions that are so relevant to us even today. And as we wrap up, I want to leave our listener with something to think about, something to ponder. The privatization of water, it was this huge shift, and it had these really lasting effects. It's made me think a lot about, that balance between profits and essential services. How do we make sure that everyone has access to clean, affordable water, regardless of who's in charge, who's running the show? I think that's something that's really worth thinking about. 568,